Got a stock alert for you. Technology under huge pressure. Now, remember, it wasn't that long ago when these big-name tech stocks, they were absolutely soaring. And, of course, other niches like cybersecurity also hot now. They're all under pressure. Consider that Google's down 10%, Apple's down 18%, Netflix down 19%. And this is from just recent highs. Is it an overdue pullback, or is it really the end of the road? Steve Cortes and Jason Rotman are back with me. Cortes, you've been a little iffy with respect to some of these high-flying techs, even though I got to tell you the same reasons or rationale I hear from them being down, they were in place when they all spurted up to these crazy highs not long ago.
No, and listen, and Charles, you make an excellent point. The fundamentals, I don't think have changed dramatically. What has changed? Price action. And I think you have to, as an investor, as a trader, you have to respect price. And the fact that these are trading as poorly as they are, I think is a problem. I think the FANG has become a term on Wall Street now. That's Facebook, Amazon, Netflix, and Google. That four horsemen, they were unbelievable the first 7 months of the year. They started really crashing in August, and they're continuing to do badly so far in September. I think you need to be incredibly careful among those names. Now, I will say, though, I'm not all bad news. You also mentioned Apple, which has had a bad time. I love Apple on valuation. That is not stretched at all, in my opinion.
Although the
other FANG names?
The Apple valuation debate has always been out there. Traditional valuation metrics never applied to Apple, and they still have their share of critics. I think Jeffries had negative comments today. But, Jason, the FANG, if you will, it feels like they took an unannounced visit to either the dentist or got knocked in the mouth, because they're looking pretty bad right now. What do you think? Trader, investor, what would you do here?
Sure. Well, honestly, Charles, I will refer and defer back to my previous point of, how to tell whether in a bull market or a bear market. We're clearly in a bear market. I'm not saying Netflix is going to go down for the next 5 years, but listen, Netflix is falling out of favor. You have decent news coming out there. Their earnings, their income are growing. Why are they going down?
Favor? Jason, this is what I don't get, okay? Yeah, of course we know ultimately there's going to be competition, but why are they falling out of favor now?
Easy answers. Number one, their PE is 226.
But it was higher when the stock was higher, though. That's what I don't get. It was $130 a share. Why does the PE matter more now than it did just about a month ago?
Charles, I'll tell you.
Because of the environment. Investors are more scared, okay? Investors are more scared now. Everything is below their 200-day moving average. Furthermore, you have fundamental news with Hulu offering a commercial-free service. That may take a bite out of Netflix with Hulu's fangs there. So you have a whole different mentality where even good news is bad news, and we're seeing that.
Real quick, Steve, and by the way, we keep hearing that there's going to be, there might be, and there could be, and there will be, and that seems to have so much more pressure on these stocks than the fundamental story, which hasn't changed.
Right, but what has changed? China devalued. Markets are losing faith in central banks. When that happens, and I think it's happening right now, the highest flyers get hurt the most. And so that's why I think you want to avoid FANG, go to safety.
Let's leave it right there. You guys are great.